Hey, what's going on? It's Nick here from Ways of Wealth. Thank you for tuning in. It's week 40 of the market recap. And if this is your first time here, we highlight key events that happened in the market over the past week. And if you're watching this, you are too late. The news is already out. If you haven't heard it, you're living under a rock. Donald Trump submitted on Friday to Walter Reed Hospital, tested positive for C-19. But that's not what this video is about. This video is about what potential impact this has on the markets. But before we begin, I'd like to ask you a huge favor. If you learned something new, if you get some value out of this video, smash the like button. It helps me out and I would appreciate that. If you enjoy the content, hit the subscribe button, turn the notification bell on. We do this every single week. What a hectic week it was. Okay, we had the end of Q3 of 2020 heading into the final quarter of what seems to be a year that just will not end. On Tuesday, we had the first presidential debate, and if you tuned in, you learned very quickly that it was just going to be for entertainment purposes only. There is no way in my right mind that changed anything that I was thinking beforehand. If anything, it just made a mockery of it. And to add on top of that, North America woke up this past Friday on the 2nd to learn that the President Trump and First Lady Melania had tested positive, and this sent the pre-market futures into a frenzy. Although we did see stocks come off their intraday lows, what we know for sure is that there is uncertainty in this market. There's uncertainty with so many different underlying factors, and with just less than a month away to go to the elections, don't expect this trend to end anytime soon. The fear of a second wave now becoming a reality was reflected in the jobs report on Friday, showing a slowing of jobs added. I think it was 661,000 that were added. The analysts were expecting about 850,000, so quite a big gap there. And also important is that this job report will be the last before the election. With all of that being mentioned, it is important not to forget about the stimulus talks. It seemed like for so long, Wall Street was hanging on the optimism that another bill would be passed, not to forget Main Street, who is in desperate need of it. It seems inevitable at this point that there will be another bill passed, and the theory is that the markets have detracted themselves away from a particular party color. It seems inevitable at this point that another bill is going to be passed. Therefore, a Republican win, a Democratic win, it doesn't matter. And if you take a look over the past history since the 20s, it doesn't matter which party is in office, stocks only go up. And I completely agree. Why? Because the party that is in office does not determine how well a corporation is going to do. Okay, it's not going to tell you how many phones Apple sells. It's not going to tell you how many cars Tesla is going to sell. Okay, and I'll give you an example of this. The Tax Cuts and Jobs Act that was introduced by the Trump administration on November 2nd, 2017, was supposed to help businesses. It was supposed to help them by cutting their taxes, in turn using that money to employ more people or innovate and become more efficient. But what we saw is that the corporate profits did not increase over this time period, okay? So they were stagnant since about 2015, and this came into play in 2017, but it wasn't really reflected in the profits. Now, if we take a look at what the S&P did over this 2017 to present time period, we can see that is up almost 30%. So the companies were using that cash to buy back their shares and artificially enhance their stock price. But back to the main question, what is going to happen in the markets? It's clear that the short run is filled with volatility. There's tons of noise that's causing the market to move up and down, up and down. But over the long run, we would anticipate that this noise fizzles out. We already have an understanding that the market doesn't care if it's a Trump win or a Biden win. So what does that mean? That means that the S&P is going to push through to all-time highs. Here's why. Okay, in 08-09, during the economic recession of past, what the Federal Reserve did as one of their solutions to help put the economy back on track was to lower the Fed funds rate. Now, what does that mean? That means that the interest rates got lower. So you could go out and get a mortgage at a lower rate. You could get a loan at a lower rate. And in turn, what this was supposed to do was to stimulate the economy. Now, it would entice businesses and individuals alike to go out there and start moving money around and get the economy going and take advantage of that cheap money. So everything's going well. The Fed drops the interest rate from 2009 to 2015. The market's in a steady uptrend. Okay, it passes the previous 2008 high and keeps going. Now the Federal Reserve sits down and says, what do we do next? We need to pay back this money that we're printing out, so we're going to increase the interest rates. And what we can see from the S&P is that there was a stagnant period. The 2015 to 2017 period is relatively flat. It doesn't really go anywhere. So the markets over this time period are essentially moving sideways. Now fast forward to 2018, and the Fed decides again to increase the Fed funds rate a little bit more rapidly this time. And it led to market panic in December 2018. We had that sharp sell-off that happened, obviously followed by a V-shaped recovery. But the markets were panicking because the interest rates were increasing, and they were worried that these corporations had piled on so much debt that they wouldn't be able to pay it back. And what does this mean? Okay, this means in general that the Fed will not be able to touch interest rates for a very long time. Okay, before it was about 7 years from 09 to 15 until the Fed raised the rate only like 0.25 basis points. So it'll be a very long time until we touch them again. So with interest rates being so low and history telling us that they'll be low for a very long time to come, it seems very obvious to me is that stocks will only go higher from here. Okay, so this is my own personal opinion. I would definitely suggest doing your own research before making any positions that you may have. But what I'm personally looking at is a S&P 500 ETF that covers the whole market. I'll look to add to that on weakness with the short-term volatility that's coming up. I also really like tech. I like cybersecurity, CYBR for the cyber, QQQ for the NASDAQ 100 to get some tech names in there. And if you think Biden's going to win, or if Biden does win, you could look at some renewable names. Green seems to be the mantra of the political platform that they have. But then again, before you make any positions, make sure you do your own research. Make sure that you understand the risks that are involved there. And that's all for this week in the market recap. If you enjoyed the video, if you got some value out of it, hit the like button. It helps me out and I appreciate it. If you made it this far, turn the subscribe button on, turn that notification bell on. I know you want to. I hope you all have a great week in the markets. Happy trading.